Supplementary information, we're going to pivot from compliance reporting and move on to supplementary information to the financial statements. Supplementary information is that in which a designated accounting standard setter is required to accompany an entity's financial statements. We're going to see examples of this. Anything in addition to the basic financials. Basic financials are going to be your balance sheet, income statement, statement of cash flows. Required information is not part of the basic financial statements. However, a designated accounting standard setter considers the information to be an essential part of the financial reporting, replacing the basic financial statements in an appropriate context for the readers. Essentially saying it's not part of the basic financial statements, however, it is essential for the readers of the financial statements to see in conjunction with those financials. Here's a nice graphic. We've got this in other lessons as well, and got it on FAR. I think it's a very nice one where it is demonstrating we've got the basic financials, which balance sheet, income statement, cash flow, statement of equity, looking good there. Then we have the notes to the financial statements, which are accounting policies, contingencies, any inventory methods we want to disclose, and then number of shares outstanding. These are just some items that would be included in the notes of the financial statements. However, then we have supplementary information. Now, these are going to be pieces of information that are essential for the readers of the financial statements to read in addition to the basic financials. You see here that these are going to be included as an area directly affected by existing FASB standards. So all of this needs to follow those FASB standards. And we're going to talk about, is this under audit? What's our responsibility? We're going to dive into that and more. Here, there's other items that need to be included. This is more so for FAR, but wanted to include that as well. Introductory to that supplementary information. Well, this is going to refer to information that elaborates and builds upon the current year financial statements. These items are similar to the notes, so it's an important distinction. Make sure you know the difference between the notes to the financial statements and supplementary information to the financial statements. Supplementary information would be any additional information to support the statements that does not fit into the notes section. So I'd say, first, assess, does this belong in the notes? If it doesn't, where's a good place for it? That's going to be in the supplementary information. An auditor has a responsibility to perform limited procedures over any supplementary information to the financial statements to ensure its compliance with GAAP. Now, this does not have to do with compliance reporting. Now, obviously, it could have to do with compliance reporting, but this is essentially a separate topic that is in conjunction here with compliance reporting in this one lesson, but this applies to audits. It applies to other procedures, other engagements as well. Other information refers to any information, right? This is just that we saw below supplementary information, not as essential here, that's provided to the readers. It could include items such as letters, in any prior year financial statements, statistics, analyst reports, anything to help put context to the financial statements. An auditor has the responsibility to read these pieces of information to verify that it is materially consistent. So you're just looking to make sure that there's no broad inconsistencies, there's no massive glaring mistakes, right? You're going to read these other economic statistics, and if they say that the industry exploded by 30% growth, and you know that that's just not true because you just think about it for a second, or you do a small amount of research, you spend a few hours just researching it, you say, okay, it's either, yeah, it's really bad, it's really off, or yeah, it's pretty accurate, right? So your goal is the financial statements. Then you're going to do limited procedures on the supplementary information, and then anything here, other information, and you're just going to look for any blaring material problems there. Supplementary and other information. What are the requirements per GAAP? Generally accepted accounting principles, and FASB, our Financial Accounting Standards Board. Well, when financial statements include supplementary information, which is outside the basic financial statements, but is required by GAAP or FASB, the auditor can choose to, they can disclaim an opinion, just say we're not giving an opinion. They can express an opinion if the auditor has been engaged to examine the information. And they can also report on whether the information is fairly stated in relation to the financial statements as a whole, if appropriate procedures have been applied. Now, if the auditor chooses to report on this supplementary information, if they choose that bullet point where we actually do report on it, the auditor's responsibility is to apply limited procedures, as we said, to that supplementary information. Important point, make sure you know that. Limited procedures on the supplementary information. Additionally, the auditor's report should include a separate section with the heading Supplementary Information or Required Supplementary Information, RSI, for a non-issuer, or an explanatory paragraph for an issuer. Making sure we know all of these points, right? I would definitely add these to your memorization in your mind. The auditor is not required to audit the supplementary information. You're just performing limited procedures. If the auditor performs sufficient procedures, He or she may report on whether the supplementary information is fairly stated in all material respects in relation to the financial statements. And what are sufficient procedures? Well, those are limited procedures. In this case, the procedures that are sufficient enough per the AICPA, per the guidelines that you actually need to do. When audited financial statements are presented in a client's document containing other information, the auditor should read the other information to determine that it is consistent with the audited financial statements. All of this, super important. I would definitely be as familiar as you can with it. Make sure you know that what types of procedures need to be done. Be familiar with the results of it, right? Ensuring that you're able to answer any questions that have to do with the notes, the financial statements, supplementary information, anything like that. Here we're going to see examples of how we are going to present our opinions for the supplementary information that we've looked over in the financial statements. And yes, obviously we've got a big block of text here, and for a lot of the other opinions, we will have the same. So I'm just going to pick out some important points. If you want to take a read, feel free to pause and look through. The following here, this is an example of an explanatory paragraph that the auditor may use when engaged to report on supplementary information in relation to financial statements, and we've got an unqualified opinion. Now, our audit was conducted for the purpose of forming an opinion on the financial statements, right? We're letting it known what the purpose was. It was for the financial statements, not for the supplementary information. However, the accompanying supplementary information is presented for purposes of additional analysis and is not a required part of the financial statements. So, right, as we talked about with our graphic and just in general, such information is the responsibility of management. Good, we're giving management the responsibility. Very good. And was derived from and relates to the underlying accounting and other records used to prepare the financial statements. The information has been subjected to the audit procedures applied in the audit of the financial statements and certain additional procedures, including comparing and reconciling such information directly to the underlying accounting and other records used to prepare the financial statements or to the financial statements themselves. And basically here, the information is fairly stated in all material respects. Now, yeah, I totally I enjoyed reading it, really diving into this. Maybe a little bit of an audit nerd. That is totally fine. I'm here to just describe it to you, here to guide you through it. So yeah, this is essentially what the unqualified opinion would be. And well, what would it be if we didn't walk through the other types of opinions and see how they compared against each other? Now I'm kind of enjoying this red color as well. Mix it up. We got the red underlying, had the blue, but it's always good to get a change of pace. Now here we've got the following, which is an example of our qualified opinion, and we're going to see some similarities, and actually we're going to see pretty much everything the same. Except here, we say, in our opinion, except for the effect on the supplementary information of, and then we're going to give the reason. Maybe, it's 95% accurate, except for one pretty big deal, except it's not a pervasive issue, right? It's just everything looks good except for this one issue. And that's going to be the issue, right? That's going to be the reason we have to give a qualified opinion. Maybe they misstated one particular item, but that misstated item doesn't affect really anything else. That would be grounds for a qualified opinion. Disclaimer of opinion. What happens if we just want to say, yeah, we don't want to give an opinion. We just want to get the heck out of there. Well, this is going to be when we disclaim an opinion. We were engaged for the purposes of forming an opinion on the financial statements as a whole. The accompanying information is not a required part of the financial statements because of the significance of the matter described above. And then you're going to give your basis for the opinion. It is inappropriate to, and we do not express an opinion. That's going to be disclaimer of opinion. Make sure you're familiar with the language, the wording, because it's pretty much similar to most other disclaimers of opinion we'll see in other engagements and primarily in the audit. Lastly here, we've got our adverse opinion. And in this case, it's much more brief, as you see. Essentially, the main difference here is because of the significance of the matter described above, it is inappropriate to, and we do not express an opinion on, the supplementary information referred to above. This is going to be when we are issuing that adverse opinion, and essentially, we are going to include language similar to that disclaimer of opinion, except in this case, the main kicker is we've got a paragraph that gives the basis for the adverse opinion. And in the other case, we had the basis for the disclaimer of opinion. So very similar, you see. It's just really going to be, we're not going to give an opinion because of whatever we discussed in that basis opinion, in that basis paragraph. All right, a nice summary here. What are we going to do for each of our items? Well, for the balance sheet, income statement, and other financial statements, we are going to do full-on auditing procedures, substantive procedures, everything necessary for that audit engagement. What about quarterly results as required by the SEC? So these are not the actual financial statements, right? This could be something in the notes or something supplementary information. And to that, we're going to do limited procedures. What about these 2 points here? Summary of net income and summary of executive level compensation. Now, you could think about this. Why would these be included? Well, they're for the benefit of the users of the financial statement, and these are examples of supplementary information. Here, as we talked about, we're going to read the information for any material inconsistencies from the financial statements. And we see here, okay, well, how can we easily do that? This is a summary, a breakdown in more depth of the compensation given to executives. And because of that, we can kind of just look at the financial statement line items that have to do with this and see if they kind of match up. And similarly here is maybe a more detailed breakdown of net income that goes much more in depth than is required by GAAP. So here you can also compare it to the income statement. You can make a comparison, and if you see any material inconsistencies between these two financial statements and documents, then yeah, you might give a disclaimer of opinion or give them an adverse or qualified. If the auditor discovers any material inconsistencies between supplemental information and the financial statements, the auditor should discuss the matter with management. Management doesn't do anything, go to those charged with governance. If those charged with governance don't do anything, well, I would get the heck out of there. The auditor discovers missing information. The auditor should consider the information is required by GAAP. If it is required by GAAP, then the auditor should inform management that it must be included, because that's right. GAAP requires certain pieces of supplemental information, but there could also be pieces of information that management includes just for the benefit of the financial statement users. Maybe it's just kind of more of an industry standard. It's just kind of expected of someone in that industry. If the information is required by another body, such as the SEC, okay, here's an interesting point, because it's not required by GAAP. And generally, when we are dealing with financial statements, when we're working as an auditor, as a practitioner, we're worried about GAAP, we're worried about the AICPA, PCAOB. But here, let's say it's a large public client, and the SEC says, okay, for all of you hedge funds, you need to include certain disclosures, but GAAP doesn't say it's necessary. So what are we going to do here? If the SEC says you need something and management would prefer not to include it, the auditor can still issue an unqualified opinion and include an explanatory paragraph discussing that missing information. Just like we've got in many sections, you can see a nice little sim on what you do in different instances when it comes to supplementary information. I would make a nice bit of notes, what you got there, on what we do in each instance, what we do if we have supplementary information, if we got notes to the financial statements, also the actual financial statements. When are we going to give qualified opinions, adverse opinions, and obviously something such as this, where if it's required or not required, or who requires it, what do we do in each situation?
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.